Phil Williams, CEO of IsoEnergy. We're a diversified explorer, developer, and near-term producer with uranium projects in the top 3 jurisdictions in the world: Canada, the United States, and Australia.
Bill, good to see you. Welcome to London.
Great to see you, Matt.
WNA, World Nuclear Association Symposium.
Feeling a lot better this year.
Do you think so? Is the mood changed?
Oh, 100%. I mean, versus last year,
Yeah.
we were in the depths of the uranium market. Now equities turned quite sharply after the WNA, but while we were sitting here, it was feeling pretty bad. Completely different mood this year.
Okay. What intrigues me are the who is here. Some interesting names you wouldn't expect to see here. Microsoft, for instance.
It's very telling, and I mean it's what we've seen over the last year or the last 2 years with all these tech companies starting to come into the space, looking at ways to secure nuclear power for particularly these big data centers that they're rolling out.
Yeah, well, yeah, a lot happening downstream. I guess the question I have is how does that affect, how does it benefit the guys upstream, the guys actually trying to find and produce the pounds at the moment? Do you think, will the money flow back upstream anytime soon?
Look, it's going to have to flow up at some point. It's hard to say how soon that's going to happen, but I think increasingly, and it's events like this where you get all of the components of the nuclear fuel cycle together and people start talking and they figure out that the problem is ultimately with the uranium supply side. Yes, there's issues with conversion, and we're seeing people make announcements just at this conference that they're getting into conversion because that is a bottleneck. But you can have all the conversion capacity in the world, all the enrichment capacity in the world, all the nuclear plants coming online or being planned to be built, but if you don't have the fuel at the beginning, then it's all irrelevant.
Yeah, you've got to feed the beast. You've got to feed the beast.
Yes.
And maybe let's talk to, I don't want to stick on the demand side because I get there's enough demand and it's increasing, it's all good. And there's maybe money backing that up as well. So that's fantastic. The supply side is the thing that concerns me. We've talked in the past and saying maybe the numbers aren't going to be as advertised. We've got some numbers coming out, during this symposium that we're at, which on the demand side, which kind of confirms what we're thinking. But on the supply side, lots of negative guidance this year from across the globe. Is that good for us or bad for us in the equities?
Look, I think it's a double-edged sword, right? Because on the one hand, we can all point to tight supply, and that more supply needs to come online, and ultimately that should move prices to where they need to be to bring that supply on. Yeah. But on the other side, and I think about this, run a company, talk to investors a lot, and I think about if I'm wearing that investor's hats, and time again, companies aren't able to deliver, it might have me reticent from investing in the next company that comes along and says, oh, we're going to bring a mine on, and it's going to go perfectly on time, on budget, nameplate capacity right out the gate. It's just not going to happen. So expectation setting by companies, I think, needs to get a lot better in order to not risk losing investors that come in. And it's, we're starting to get a broader investor base coming into the space. So we've had the uranium specialist funds, the resource funds, the clean energy transition funds. Ultimately, we want the generalists to come in, but if they come in and time after time they invest in companies that fail or don't deliver, then they're just going to go back on the sidelines for some period of time.
Yeah, I think I've been talking to a few groups this week already, and even in the run up to it, and I think everyone's slightly disappointed by the amount of negative stories out there in terms of not just ISR and also on the hard rock side, where companies have failed to understand just how hard it is, just how long it takes, and just how many kind of roadblocks and hurdles that they will come across along the way. So I've had people's X dollars per pound in the ground. That's not the bit that worries me. The finding is hard, so it's another discussion in a second, but it's the cost of getting it out of the ground into whatever resin form on the ISR for someone to actually do something with. And that kind of fulsome number is not appreciated in here. And I think when we've seen an environment where companies are talking about incentive price, it kind of feels like with these failures, that incentive price is going to get higher and higher and higher, and it's just not coming. Spot, low 70s. That can't be good for anyone. What's going to move the needle?
Well, look, I think you're entirely right. The actual real price of getting that marginal pound of production out of the ground is much higher than anyone thinks. And when you're producing less than your nameplate capacity, your fixed costs are going over a much smaller amount of pounds, so your per pound cost is higher. And those numbers will ultimately get into the market, and it will be a surprise to everybody in this space, I think. Again, so I think it's about setting expectations. And I find your comment, it's very strange as you're saying it, and you're saying, people haven't been able to deliver. What we have in the industry today, which I think is great working for us, is we have a lot of people who have been around for a long time. And you walk the floors down there and you will see gentlemen and ladies who have been in this business for a long time. So how could they get it so wrong? They know how hard it is. We've done this before in 06, 07 when the price went up. A bunch of these mines were built or restarted, and we had those struggles then. How come we can't get it right? And is it because they need to set the expectation, they feel like they need to set the expectation so high to get investors into the story? But at the risk of disappointing, I just don't see the benefit of that.
Well, you're right. I mean, the great and the good are downstairs. I went downstairs to meet one of them, and 4 others descended upon me, all of whom have produced in the past. And kind of going through that process. Well, actually 2 of them already are, but others are near term, reproducers again. And they were commenting on the lack of kind of skill set, the lack of understanding, not just by people in industry, but the market, by utilities and the rest. And then they kind of the conversation went along the lines of, you need to kind of reset, as you just said, of expectations about the difficulties here, and therefore the cost implications and the time implications, because it may not be there when utilities think it's going to be there. We've been saying that for years, but when the rubber's hit the road, like it has recently, people just haven't been able to kind of get that product into market, especially the North American market.
Yeah. It's hard to understand why people are ignoring that fact, because it isn't translating into price discovery. So that will have to change, and I don't know what it's going to take. I mean, just last week, Cameco announced that they're reducing their guidance on their flagship MacArthur asset, and we haven't really seen a response in the market the way that you would expect. So I'm not sure what it's going to take, but it's going to happen. And listen, we've been around this business for a long time, and sometimes it's not the catalyst that you immediately see. It's a culmination of things, and then suddenly it happens, and then the light bulb comes on, because you realize, oh, this is why we're moving now. It's because of all these things that we've already seen. So it's tricky.
In terms of buying, are they kind of like? I'm trying to think what if there's some sharing or movement of this mobile inventory component. How damaging is that? Do people have a real grasp of? Because sometimes the same pounds will trade multiple times, and you think maybe there's more around than people think, even the utilities.
I think that might be part of it, and look, I do think some of this production is coming onto the market. I mean, you saw Spot raise $200 million and deploy it, and prices, moved at the beginning, but they actually front run their purchasing, and then as they were purchasing, it actually ticked down because they kept being able to find material. And we are seeing some of the producers, the restarts, et cetera, even the ones that are missing their numbers, they are selling some pounds into the spot market. So there is some material out there.
Okay. It's been difficult to sort of, looking back historically over the last 5-6 years and reminding myself of some of the stories I was told and some of the analysis I was given over the years. It's pretty interesting. I think I'm probably going to say that quite a lot of people didn't know what the hell they were talking about. But here we are now. There's enough companies, North American companies as well, sort of getting into production where we're actually sort of getting proof that perhaps it was always going to be as difficult as some of the old timers said. It was going to take longer. It was going to be more expensive, etc. But enough of that. I think what we're saying is here that some will make it and some won't, like the last cycle, and the ones that stand out should be identified now, and you should be investing in those, because I think there's a lot of talk.
Listen, and I think that approach is important. Like we as a business, we take a long-term approach, so we're not worried about what happens this month or next month or the month after that. We have strategies around all of our assets. The portfolio approach obviously is key, but then even within those assets, what are the strategies, and working those assets over the long term and not rushing to any decisions to restart something because it's the flavor of the day. We want to, if we're going to do it, and I think all of these misses that we're seeing has reinforced the strategy of let's only move ahead into production when the time is right and when we're ready.
Okay, so which is exactly what I want to talk to you about. Okay, we got there. So I just wanted to bounce around the macro a bit, but portfolio construction, it's a business model. Okay, compared to like single asset or single district or single jurisdiction models, where people say that's what we've got. That's what I'm going to stick with. I've got my head down, and I don't need to raise too much capital or think about the kind of capital markets as often as I would with, say, a portfolio approach. Some of those guys struggling a bit because when they are flavor of the month, to use your phrase, it's all kind of good. When people get a little bit bored and move on, you get cash constrained, and that brings with it its own problems. So was that at the kind of forefront of your mind when you were constructing this portfolio of yours, or was it, I'll tell you what, we'll just copy Dennis and we'll just copy UEC and we'll sort of see how it goes? Give us the intellectual analysis.
Yeah, look, this was a business plan that was articulated from the beginning, and we started this in 2020.
Yeah.
So who copied who, we'll leave that to another discussion, but this was exactly, the portfolio that we have today was constructed on purpose for a reason. Yeah. And it was for the reasons that you're talking about, and which are playing out in the market for these single asset, single jurisdiction companies. And there's risk to having one asset in one country, and it could be a country risk or it could be the asset risk. And if you don't have other projects, then you wear that risk, and that's all the exposure that you have. Also, having different, and being in different jurisdictions, being in the better jurisdictions was obviously key for us. Having assets at different stages of development, it does take a long time to develop a uranium project, even the best projects in the world. And you can think about projects in the Athabasca Basin that have taken 10, 15, 20 years to develop. And so there are going to be, and there's the Lassonde curve that we all know about, where there will be periods of time where not a lot of activity is happening, not a lot of news flow is coming out, and so you lose investors' attention. So having other things that you can work on in that period of time, and then scale matters. And so that's where I think the Denison and the UEC comparisons come in. These companies have scale. Mm-hmm. They trade at excellent multiples. They have great liquidity and great buy-in from investors on that basis. And so, yes, we would absolutely love to emulate those companies. They've done a tremendous job, and they're leaders in the industry because of what they've done in terms of putting those portfolios together. Right,
but let's look at those variables, those assets, because you can talk about, okay, jurisdictions here, okay, Canada, North America, Australia, right? You did have Argentina in there, but you thought maybe that doesn't match our risk profile. Maybe now it would look really smart. Milei's come in and done a job, but that might be too short-termism for you. I don't know. But so you're going stage of asset, like Tony M, old producer, fantastic. That's a near-term producer, you could argue, right? Then you've got very early stage exploration, which is what you're doing with PurePoint, for instance, or advanced exploration, like you're doing in the Larocque project. And then there's going to be different risk profiles in terms of grade and lots of different ways you can construct a portfolio. So in terms of that holistic vision of yours, is it a case of, well, let's get the best of whatever the heck's available, or are you consciously deciding to go after specific types of profiles that match a sort of tick box exercise?
It's a bit of both. Right. I mean, we are always trying to upgrade the quality of our portfolio, find the better assets. And if you were there from the beginning, we were an undercapitalized business, and we picked up the assets that we could pick up in that moment. I
remember speaking to you in the early days, and it was a case of...
And then as we got momentum, and as we were able to access more capital, we were able to...
But what changed? That's the bit we're getting at, because now you can access capital when you want. You've got an ATM, you've got cash there, you've got liquid assets, or, well, hopefully, there. And money doesn't seem to be an object for you, where it is for others, and it probably was for you at the beginning. So something happened.
Well, I mean, I think we were able to upgrade the portfolio. We were able to get near-term production assets, like you talked about, Tony M. And then ultimately, we have one of the marquee world-class assets in our portfolio, the Hurricane deposit at Laroque East.
Right.
That's put us into another level where we can, access that capital you're talking about, and we know we have a generational asset that will ultimately be a mine in the best jurisdiction in the world, with the best grades of any project in the world, with tremendous characteristics for development.
I'll come on to that, I promise. But again, the construction and the design of portfolios is important. You need to have the right types of people. It's not a numbers game. It's the types of people, the types of skills, and what they bring to the team. So again, what have you built there?
Well, look, I mean, it started. This was always a story of growth through M&A. So it started with a very M&A focused experience set, and that's really what I brought to the company. And then as we've built the asset portfolio, we've brought in the people that have the skill sets in the areas that we need. So we have mining people. Marty Tunney, our COO. I think you've been to Tony M. You've met with Marty. Tremendous experience permitting and developing mines in the Americas. Mm-hmm. He's layered in a team of mining people and geologists beneath him. Again, many that you've met. And then in Canada, particularly on the exploration side, when we did the transaction with ISO and my former business, we inherited, and we've added to that team a group of people that tremendous experience exploring in the basin. Most of them with time spent at Cameco, where they cut their teeth. So, yeah, we've been able to build, particularly the heads of our groups, and then what I try to do as a manager, as a leader of the business, is empower those people to fill their own teams in with the types of people that they think they need, and that will fit in culturally and have the experiences, the experience set, and really be entrepreneurial even within their division, and it's working.
Right. So if we look at and just taking the money, we'll come back to on the projects in a sec, but the type of money that's around for the type of things that you think will get rewarded in terms of value of the company, etc. So I could look to Amir's announcement recently at UEC, and that they've talked about moving downstream, and I think that's great. I think that's brought them another 10 years of new stories and access to large sums of capital along with the rest of the portfolio. This integrated approach, that's what everyone wants to hear. For you, clearly not there yet, but coming back to this, how do you construct a portfolio and how you attract capital? It's going to be slightly restricted by the fact that capital's looking for specific types of profiles, return on that capital invested over various time frames. Different funds have different beliefs about how the space plays out. Do you think there's exploration money available to you at the moment, or is it more likely, give me another Tony M? Is it which end of the scale?
I think what you're saying actually proves our model point is we can access both kinds of money. And that's the kind of money and both kinds of money are out there. I think the exploration money is still a bit harder, but in Canada, we do have this flow through share construct, which makes it a lot easier to raise money for exploration. So particularly in Canada, but we kind of can appeal to whichever investor you're talking about. When and post our New York Stock Exchange listing, we tried to spend a lot more time in the United States, meeting with investors down there. Obviously, the pools of capital are enormous. The number of funds is staggering.
But is that they want U.S.-focused investment?
Not necessarily. I mean, they're happy with that, and that resonates with them, but they're looking for near-term cash flow.
Right.
So they're looking for, when are you going to produce? When are you going to start?
Money.
That's right. So now... But again, I think it's the point that you're trying to make, or I'll make the point based on some of your comments, is that the pools of capital that are out there are, if they're all looking for different things, we can kind of offer them all of the things. Do you want near-term cash flow? We have it. Do you want high value exploration in the best place in the world, the Athabasca Basin? Do you want call optionality with large or high-grade projects that have historical challenges, but we could unlock, asymmetric upside potential? We've got that. Okay. Do you want to be part of a group with management team that has tremendous experience in the sector, both uranium and mining, decades of experience? We've got that. Do you want to be aligned with some of the leading corporates and investors in the space, whether it's NextGen owning 31% of us, Energy Fuels being a shareholder, Mega Uranium, Sachem Cove, all the ETFs. If that appeals to you, come on.
So you're one-stop shop for capital interested in not just mining, but specifically this form of energy that everyone's talking about at the moment. Okay, so do you think that's the secret sauce? He said, you've got to give people what they want, not tell people what they want. Do you think some companies are guilty of saying, this is the only investment that you'll ever need, come buy one today?
Yeah, possibly. I mean, I think we thought about it a little bit differently. In my career, I've worn the investor hat. I've worn an investment banker hat. I've worn a sell-side research analyst hat. And when we started on this path, I said, what is the kind of business I would want to invest in? So it's less for me about telling people what they should invest in, although I'm happy to give them my opinion as to why this would be the thing to invest in. But we created it with our own, what would we invest in? What's the profile and characteristics of a company that I would want to buy as an investor?
Okay, so it's getting away from the kind of Gerald Ford, you can have any color you want as long as it's black. We will give you any color you want.
Yes.
But we know you want a car.
Yes.
Great. Okay, there's where we're at. Do you know what I mean? It's always the thinking of the management team or the vision of the business plan, which makes it easier to sell or harder to sell.
Yeah.
And that can I clarify?
Yeah, look, and if I can distinctly remember in early 2020 sitting down, writing this all out, we had nothing. We had not one asset. And I said, this is the kind of business that I think we should build for the next bull uranium market. This is, I think, the thing that would have longevity, be attractive to investors, be able to create something sustainable for a long period of time, ultimately become a leading supplier of uranium to utilities. This is what I wrote out, and I pitched it to my partners, and we're not all the way there, but we're a long way of the ways there to delivering that business.
Well, you've got to be measured and again react to the customer, which is the market, and say,
yes,
if they're ready for production, they will reward me for getting into production. But that's just not there at this moment in time. Okay, so can we look at some of the individual assets we mentioned, and we'll stick with the Hurricanes and the Toniums, and the portfolio is vast. And I kind of feel there's some sort of protection by having a big portfolio in terms of that you can monetize those in different ways at different times, depending again what Mr. Market is telling you. Tony, how are things going down there?
Look, very well. We spent the summer working on a number of different technical studies to look at optimizing the project, right? And really what that looks like is, are there ways to beneficiate the ore when it comes out of the ground, so that we send less waste and more uranium down the road to the mill when we ultimately get there. And there's a couple of different studies that we're doing. We're going to get the results back, and the preliminary results are good. We're going to get the rest of those results back in the next couple of months, and at the right time we'll release those results to the market. What we're thinking about is a next step there. As we sort of wait for those results and update our internal models and potentially put those models out to the market in terms of the economics of the project, we're thinking the next logical step is to go in and take a bulk sample out of it. Okay. Let's go try mining it. This will be the first time that the project will be mined for over 10 years, almost 15 years. Yeah. Let's get back in there. As a company, let's hire a contract miner, get the safety protocols in place, and actually do some mining. We'd only look to take, 10, 15, 20,000 pounds of uranium out,
right?
But give us a lot more information, again, that would feed into mine plans, economic studies, scheduling, mining methods, et cetera, et cetera.
It's about operating. Again, a lot of companies come through and say, "Oh, we're going to do bulk sampling because it'll help us generate cash to actually pay for us to continue to exist." This is no. We want to understand how to better operate the mine when we get going.
Correct.
You're not strapped for cash.
Yes.
Situation. Okay,
yes.
Fine. Right. And is there any kind of exploration going on around there as well? Because I know there was option around that.
Yeah, well, we haven't announced this yet. We'll announce it very shortly, and this is, this will come as no surprise because it's something that we talk about. But we picked up a huge property to the northwest of Tony M, which looks like where the Energy Fuels Bullfrog deposit might continue. The trend continue, not the deposit itself. A project called Flatiron, and we're in the process of planning an up to 20-hole program there. We, the very interesting thing about the U.S. is there's a lot of old data that you can dig up, and I'm sure you've heard this from other guys on your program. You can, in file cabinets tucked away in somebody's garage, you can find these reports. We found some reports that had ore grade intercepts in Flatiron.
Yeah.
Never really followed up, or we couldn't find the follow-up, so we're going to follow them up.
What are those? What do those historic numbers look like? I know they're not your numbers; they're something you found, but
it would be anywhere from 2 to 10 feet from 0.2 to 0.4%.
Okay.
Which is stock standard, what we'd find in the heart of Tony M.
Right. So once you've done the work, you may be able to say, well, that could be blended together quite nicely. Very nice.
Well, exactly, and the very interesting thing in this part of the world is that all the known resources were found from outcrops, and outcrops on the side of the cliff face. And when you were down there at Tony M, the decline goes into the cliff face. That seam of rock, that's where the outcrop uranium radioactivity was found, and then they went underground from there. Nobody's gone up on top.
Interesting.
And searched for uranium sort of blind. So finding these holes, following up there, and then we're going to apply some geophysics to the area to see if the holes that we see here line up with some geophysical response. That then we can then go look on a broader area which has effectively been unexplored, because it's been undercover and there's no outcrop.
That was very interesting when we went down the mine. It was clearly underground, but it was very shallow. This is not steep declines at all.
Yeah.
It's like,
because you're coming in from the side, and the ore body, it dips a little bit, but it's relatively shallow dipping.
Yeah. So you'll be exploring the air and trying to work out if there's any kind of
because there's two 10 million pound deposits. Right beside each other. And then area that's never really been explored. There's no reason to think that there's not a lot more uranium in the Henry Mountains.
You start to build it up, and it kind of feels like that's what's missing from the American story, the broader American story, because everyone comes and talks about consolidation, because you've got these little pockets. We have got 5 million, 10 million here and there, and that's fine. It's economic. Ask you more energy, it's fine. But piecing that together and having the time to piece that together, and more importantly, having the money to piece that together, that's where it starts to get interesting.
Yeah, and look, and this kind of exploration is not, we're not talking about 1,000-meter holes in remote area. They're pretty shallow, and you can do it quite efficiently, and we don't have to spend a ton of money doing it, and we can. And the great thing about uranium exploration, which you would know, of course, is that if you're into it because you run a handheld spectrometer over the core, and if there's radioactivity in it, immediately. So you can change your programs on the fly, or you can abandon a program if you're going the wrong direction and not hitting anything. And so you don't have to commit to the whole program. So this program will be, hey, let's drill the first 6 holes. Okay, we're into it. Let's keep drilling, or move this direction or move this direction. You don't have to have it all planned out and follow it, rote. You can change on the fly, which is pretty good.
And kind of the phase I'm going to in this discussion is to say, look, we've heard a few kind of ISR problems. It's 50% of the market in terms of production, so let's not get it. ISR is good, hard rock is good, but you've kind of got that hard rock restart skill, and therefore you've got the team to do that. So if you do come across that next, you've got the team who can come in there and solve for that problem. And then I want to sort of jump over to kind of what are you classifying Hurricane as? Because that's clearly a discovery, super high grade, nothing like it in that sense. But where does that go from here? Is it in a waiting pattern at the moment for the market to tell you what to do, or do you know now what's happening with Hurricane, say, next year?
Look, I mean, I think that the conclusion for Hurricane, I think we can all be quite confident what the conclusion is. The conclusion is that Hurricane will be a mine. The Athabasca Basin, when you think about what mines are on now and what mines are coming on and how we're going to replace the depleting mines and where the infrastructure is and how the infrastructure will ultimately need to be used in the future, hurricane has a role. What our job is to do is to maximize the value of that and make sure that we're part of the right conversations in terms of unlocking the value for hurricane itself and maximize the value of the whole property package. And so what we've been focused on largely is exploration on the property. We just finished our summer program. We drilled about 20 holes in and around hurricane and then further along strike. Remember, we have 10 kilometers of the rock trend.
Yeah.
Hurricane itself sits on the far west property boundary, and as you know, the deposit carries over into a property to the west, the Dawn Lake joint venture owned by Cameco and Orano. They've been drilling extensively on their side. And you can see, without knowing specifically what they found on their side, you can see that there looks like, we're starting to get to that critical mass, and that's the confidence that I have to say that hurricane is part of the development plan on the eastern side of the basin. So it's really now for us, make sure that we've explored the entire property, make sure that we leave no stone unturned in terms of trying to find additional deposits or pods of mineralization or extensions to hurricane.
Yeah.
So we're in the midst of doing that.
Are you in the midst of conversations with the other side of that? Because again, when you're talking about portfolios, you can't say I'm going to build everything. That would be nuts, right? But you kind of got to have phased different lump sums coming in at different times at different costs to you. And something like hurricane is a kind of jewel in the crown, really. But at the same time, you don't necessarily want to have to go and raise a ton of money to go and build this thing, but you've got to maybe pretend that you do because you need competitive tension in your discussions. But you and I, to my balance sheet today for what I want to do tomorrow, there's stuff that you can pick up which may have better future value, better return on that capital invested profile. So how do we as investors look in at that conversation, that thought process, that arbitrage that you have to go through with something as obviously as valuable as that? And who the heck's going to have the balance sheet to do that today? So because you're going to want a ton of cash and maybe some shares, or you're going to want all. What are the options available to you? Because I benefit as a shareholder, right?
So hopefully I'm understanding the question correctly. But I mean, the first part of the answer there is that we have time as our friend.
Yes.
In a way, because the crunch in the basin is coming, and every day or month.
Meaning what? We mean the crunch.
Meaning that mines are being depleted.
Yeah. Okay.
And we could be specific. So Cigar Lake will run out of ore by 2035. According to its owners who have published the extension study, it goes to 2035. What comes after 2035 is not obvious in terms of the other resources. There are other projects and there are other resources, but there's nothing that can immediately, in our opinion, step in and replace Cigar Lake.
So it becomes more valuable the longer you hold on to it.
We think it's more valuable the longer we hold on to it. Obviously, if we can expand it, it's even more valuable. So, yeah. But even not, waiting...
But don't spend money on development yourselves. Is that what I'm hearing?
Well, it's not ready, wouldn't be ready for development anyway. Like if you're talking about the actual construction of it, the next phases for the project would be infill drilling, improving the resource confidence. So we have an indicated resource, taking it to measured, taking it to proven and probable over time. That would be the next step. And then the other part to the assignment would really be looking at the different mining methods that would be appropriate for the deposit.
Yeah.
And so, the question is, do we do that as ourselves or do we wait until something happens where the two sides are put together?
Yeah.
And, again,
what I'm trying to get at is you feel this is an appreciating asset in the portfolio, no rush, we've got tons of cash, we're not going to put it under pressure or sell it cheap. Don't
Absolutely.
worry about it.
That's entirely our position.
Okay.
Every day that goes by, we think it increases in value, both because the urgency for it to come online will only increase, but also we're obviously bullish on the market, and when the market increases, inherently, the inherent value of it will also increase because, we just think that, so we think we're in very good position. As you say, we're extremely well funded today on our balance sheet with $85 million, but we also have very deep pockets behind us who will continue to support us. You know, we raised $50 million earlier this year. NextGen contributed $12 million. And they'll, you know, so I think that's a very strong signal to the market that they're here supportive of our strategy for the long term, not going anywhere.
But it's one of those things with NextGen, etc. They got a ton of pounds themselves, right? They're doing just fine, and it's the kind of order of play, and what your options are with having someone like that involved, or any other party wanting to come in and pick that up and maybe get into production. But it seems obvious where it's going to go. But how you monetize that versus how they monetize that is two different parts of an equation, right? So how do you set yourself up to get the optimum amount of value out of that asset and not have to wait until they do something useful with it?
Yeah, look, I think it is...
because they've got a big funding requirement, a very big funding requirement of their own.
Yeah.
Right? And then maybe this might be a nice starter for them. Maybe. Who knows? You could argue that.
Yeah, look, and I don't want to spend too much time talking about how they're going to fund their project. It's not... I'm not involved in that, but I know the quality of that asset, and I think funding is going to be the least of their challenges. So, and I can tell you that the discussions do not look like, oh, we will monetize our position to fund.
I'll give you a bit now, but hold
on. Because I think what they see, again, I don't want to speak necessarily for them, but these are people who have in the last 15 years discovered two of the most outstanding uranium projects in the world, and they understand the value of them, and they want to maximize the value of them for all of our the shareholders of their company and our shareholders. And so I think we're quite aligned in terms of approach and how to do that and timing.
Okay, that's the important bit. It's the timing.
Yeah.
Because waiting around for someone to do something is never kind of worked out. So sometimes, you know, like, and people come on and say, oh, Rio's interested and involved. It's like, well, you and 40 other people and other assets. So it's like, okay, so if you're creating time, it's fine. Let's bounce over to, I'm just conscious of time here, let's bounce over to the exploration side. And these are just 3 examples of how you do business in each phase. So I want to focus on PurePoint. Chris Foster came on and talked about your JV and obviously what that's done for them. From your perspective, let's hear the story from your perspective. Why would you go and get involved with someone like PurePoint?
So look, I've known Chris for a long time, followed PurePoint. PurePoint is one of these companies that's been around the space for a long time. In fact, I liken it to Canalaska. And Canalaska has been a standout story over the last 12, 18, 24 months as they've made this remarkable discovery on a project that they've had in their portfolio for a very long time. And they've been around for a long time. And these companies have been around for a long time. I think they get overlooked because investors get fatigued with them. But what you should think about when you think about companies that have been around for a long time is they have ground positions that have been put together for a long time, and we would say the same thing about the other projects that we have in the Athabasca outside of Laroc. These are projects that we have been put together 10, 15, 20 years. They've been sitting there. We just haven't focused on them because we have Laroc. But PurePoint similarly had exceptional land positions. But kind of came out of favor when some of these new shiny objects came along, new companies, you know, we've got this project, that project in the basin, and they were getting the attention. Really strong operators, guys who've been around for a long time, know how to get work done, and importantly, one of their projects was on the eastern side of the Larockies project. And as we start working our way to the east, we think, okay, if this continues across the border, we don't want to have a problem like we have, let's say opportunity. We don't want to have the same situation on the other side of the border on the eastern side. And then we had this sort of patchwork quilt of projects where PurePoint ourselves, and the light bulb just went on and said, guys, let's just put this all together, create a very large package, which is actually easier to explore because you can sort of take a step back and look at large geological features and not worry about if they cross borders onto somebody else's property because we have the whole thing. And then we just, Chris, we just came to a meeting and said, let's just make this very simple. Let's do a 50-50 joint venture.
Yeah.
We'll come in as an equity shareholder in your business.
Yeah.
You operate it because you know how to do that. And it's the best laid plans, right? So we said this and we thought, this is a great idea.
Yeah.
And then lo and behold, he goes out in his first drill program, makes a new discovery. So, hindsight is 2020, and we couldn't have known that was going to happen this summer, but very excited. I mean, when you drill north of over 5% in your first couple of holes into a target, you get pretty excited.
Yeah.
And so very happy with how that's all gone down. And we followed our money. We put more money into this latest financing. And I think what was great about it is we were able to broaden the investor base. We need more investors to come into the story, institutional investors as well as retail. And so I think it's on a tremendous trajectory and extremely happy. I think it's it's the kind of proof of concept. You know the kinds of things that we've done in the portfolio to monetize and rationalize but we're not sellers. What we're trying to do is 1 + 1 = something bigger than 2.
Yeah.
And I think we've done that a couple of times. I mean, you've probably spoken to Colin at Premier, and that's
Yesterday.
That's okay. So that's executing. He's executing the business plan that when we first spun out Premier American Uranium, we had a business plan. He's now completed 2 public markets transactions to grow the portfolio there.
Nice. Really nice.
And I know there's lots of opportunities in front of him. We continue to support it. And there's a couple of other stories in the portfolio that have been similar.
But you see that because like Colin's company was kind of they had a bit of money, but not necessarily as much as they wanted to do. Doing the acquisition, I think, that shows a different intent, a different ambition, a different aggression. It was kind of that's quite attractive. If there's more of that, I want to understand that. Same with PurePoint. It felt like good guys knew what they're doing, knew a lot, been around. Didn't have the access to the capital, and the relationship, the JV that you've got is kind of maybe unleash the beast a little bit for them and for you, and building up that knowledge base and skill set in the immediate and extended teams that you've got access to.
100%. I mean, and Chris would maybe have told you this, but there's a technical committee, the joint venture, their guys and our guys, and there's this cross-pollination of knowledge, which can only improve targeting and understanding and thinking about how to drill holes, why to drill them, how to look at the different features that you're seeing in geophysics or whatever the area is, having more eyeballs. And we have quite a lot of experience right in that area because we've got the discovery and we've been doing a lot of work.
So just I'll finish off with this one because for me, there's been a voice of discovery is just working out where you attribute value and why you do things that could attribute value. So when you've seen things like with Colin, with Premier, and with Chris at PurePoint, does that attract you? Have you seen a reaction in the market to that, or have you seen a sort of interest, people leaning in and going, well, tell me a bit more about that? Will you do more of it?
Well, we'll definitely do more of it because listen, we are bulls on the space. We think that we're going to get a very big run in the uranium market. We can't do everything, and so having sort of the farm team of companies, and taking working with people that are like-minded and see and share visions of how to build their businesses, we're happy to be part of. And it's lots of shots on goal for us. Like, we think that portfolio, we've got $40 million of equities in 6 or 7 junior uranium companies. That's a lot of shots, and we could wake up in 6-12 months and that could be over $100 million of value. But more importantly, one of those companies could have the next perfect asset for the ISO portfolio, or they could trade it, or they could or sell the whole company to someone else, and we liquidate the position, and that helps fund our business. So there's lots of different ways that doing all of this work now can pay rewards for ISO and ISO shareholders in the future.
Which is what we want. It kind of feels like, and I've seen small explorers not being able to make discoveries trot off and become aggregators, just as a mechanism to maybe try and survive by having small pockets of money. You've seen at the extreme end of that thing and say, well, I tell you what, we're kind of aggregators of value creation by making sure we've got pieces of the right pieces of the pie, as it were. And it's kind of interesting, and all that comes from is a thought process. That's the difference. Management is the difference. Interesting.
Yeah, 100%.
Good to see you. You better get down there and like shake a few hands and see who's saying what, right?
Yeah, well, I'm gonna go walk and just listen to into other people's conversations and hear what people are saying.
Sidle up.
Yeah.
No, good luck to you. I mean, it's been a really interesting year, and it's in a difficult year. You've achieved a lot. I think it's been fascinating. In fact, probably 18 months or so. It just kind of feels like that step change in.
And there's more to do. I mean, that's just the way that we operate. We are, everyone's in early, working away, trying to find the next way to move the ball ahead and execute on our strategy. And our strategy evolves too, but it's pretty fun and rewarding, and I'm very excited to sort of get up every day and do this.